We sincerely thank every one of us that have started this journey with us right from 2022. So we are back for good, hopefully, and we'll be looking to drop weekly review on the weekly basis. Okay, so now regarding ICT concepts, ICT has been uploading new mentorships, new tutorials on its channels. And if you have studied ICT, if you have paid close attention to Michael by now, you should have know that ICT has a lot of tools in its arsenal. Okay, it has lots and lots of tools in its arsenal. So if you really want to be independent of him, which I think is the goal of every trader, to be independent of their mentor, then you really have to find the model and stick to it. Okay, you really have to find a model. You really have to find just one simple model and stick for it. Find what works for you and stick for it and stick to it, which is something I have done. I have completely went off the grid and worked on myself. And even though still have weakness, I still have areas that I'm struggling with. I'm going to share my full journey with every one of us, my experience, my mistakes, and all that, and at the same time, hopefully help us to figure out the areas that we are lagging behind. Okay, so with our weekly market preview analysis, so we're going to start. Not to make this opening speech too long, we're going to be doing our top-down analysis, market preview. I'm going to be looking at 3 asset classes. We might be looking at dollar index. Then we'll look at euro USD and GBP USD. Then we might look at commodity and index markets. Okay, the idea is not to have all the pairs in your watch list. It's just to be focused on the pair that is likely going to put money in your pocket, right? So that is just it. So let's get started. Okay, we are recording. All right, sorry for the long introduction. So we'll start by looking at the weekly time frame. We'll start our analysis from the weekly time frame. And the weekly time frame is very important as a trader, because you need to be able to interpret the weekly range expansion, right? So everything I'm trading, or everything that we are going to be looking at going forward in the course of this market review, is going to be built around the weekly range expansion, right? The idea is you want to have an understanding or a read on where the next week is likely going to expand towards. Okay, so you want to have a read on it, because that's going to give you your drawn liquidity. So we all know that the market is drawn to one of two things. It's always drawn to one of two things. Market is always drawn to one of two things: liquidity or imbalance, right? So we're going to start by looking at the weekly time frame and try and get a read on where it is trying to reach. Next weekly range is likely going to reach for next, and you want to be doing this exercise on the weekend. So now, one thing that when starting my top-down analysis, the first question I always ask myself, or the first clue, because every information we're going to need to do a thorough analysis is already there in the chart, right? So I'm looking at that. I'm looking at the weekly range. I'm looking at the weekly range. I'm trying to get a read on the drawn liquidity, or where the market is likely going to reach for next. And like I said, the market is either trying to reach for liquidity or imbalance, right? So I start by looking at how the previous week ended. Okay, so today being Saturday, we are still in this week, but the market is already closed, as you can see, right? So we have this is our current week. So next week we are yet to enter into a new week, right? So now, if you take a close look, the clue is always in the how the week closes. So now, if you take a look at this week, you can see that we closed very bullish, right? We closed very bullish. So in other words, there's something that is pulling price, pulling this that put price to the upside, right? That put price to the upside. Let me just use that term. And for this week, my drawn liquidity was, we talked about liquidity or imbalance acting as our drawn liquidity, right? So my drawn liquidity for the week was this inverted fair value gap. So we broke below it. We broke below this inverted fair value gap. This was my drawn liquidity for the week, right? So we have been bearish on dollar. Okay, notice we closed very bearishly. We traded back up into this or inversion fair value gap, then closed bearishly. So I had the idea was that we are likely going to be like, trading bearishly. That was what I had in mind, that we're going to be trying to be reaching for this inversion fair value gap down here, right? So now, but you can see that we closed very bullish. So, and there was no response, there was no rejection of this inversion fair value gap that might, give us a clue that this inversion fair value gap is going to be acting as resistance. There was no rejection like as seen last week, right? There was no rejection. There's no rejection. So rather it closed very bullish. So the likelihood of this acting as resistance one more time is very low, right? So now we are almost price has almost traded through it, right? So now that means we are probably trying to reach for something higher, a higher drawn liquidity. And if you take a close look at this sample of data we have before us, we always said that price is going to be reaching for liquidity or imbalance, right? So now, if you take a close look, you can see we have a swing high here and we have another swing high, which is low resistance liquidity run, right? But this is a long-term target. This is a long-term target. Remember, we just entered into a new week, right? This is a long-term target. So I want something nearby. I want something near term, right? I want something near term, something that we can is that we are likely going to reach for from where we are currently trading. So since we are making an attempt to expand to the upside, so what is that that is above price action that price is likely going to reach for? So we are looking for one of two things: liquidity based. We are looking for liquidity based draw or imbalance. So now, if you take a close look, you can see we have this last 2 weeks high. Okay, this was last week high and last 2 weeks high, right? So there's going to be buy side liquidity residing above it. So my near term drawn liquidity to the upside is this buy side liquidity residing above this high, right? The buy side liquidity residing above this high is my near term drawn liquidity for next week. So if we are going to continue going bullish, this is where we're going to be gravitating towards. So the clue is that I want to see next week open up, then probably trade above this inverted fair value gap, come down to find support. Then that's if the scenario I'm anticipating is I want to see dollar trade above this inverted fair value gap, then probably trade back down into it for support. Then that will validate this my drawn liquidity, that will validate this old high as my drawn liquidity for to the upside, right? But if we have something like a quick rejection on Monday or maybe on Sunday opens, as soon as on Sunday open, if it gaps to the downside, if it gaps down, if the market gaps down, if price opens with a gap and it gaps to the downside, gaps downwards, then price trade back into that. That means there's a likelihood of the bearish momentum residing. And since next week is the first week of March, which is probably an NFP week, price might, be not very clean. Okay, price action might not be very clean, but that's the mindset I'm going with. For now, I since we closed very very bullish without showing any form of rejection on Friday, we didn't show any form of rejection that this inverted fair value gap wants to act as resistance, right? There was no form of rejection. So what I want to see is probably if the market opens on Sunday, should gap to the upside, open with a gap upwards, then probably trade back down into it for support. Then that will validate this buy side liquidity as a draw liquidity for me, which means dollar is likely going to be bullish next week. Okay, that is just the framework I'm going with. So I will be watching how the market will open up on Sunday, right? Then if it opens without a gap, maybe it just opened and it trades down, I want to see it stay above the consequence encroachment of this inversion fair value gap. Maybe probably just trade below it into this other block. You get, probably just trade into this other block right there, trade into the high of the other block, then move away, a quick reaction. Okay, so that's the two scenario I'm anticipating for a bullish dollar. It should open. The first scenario is I want to see it open, gap up, open with a gap to the upside, then probably trade down into it to find support and start going up, right? But if the second scenario is going to be it opens, just open like without any gap, then probably trade down into this other block right here, find support, and starts going up. Before going up, that's the framework I'm going with. So this is what is going to validate my bullish bias. That's the scenario that's going to validate my bullish bias if I see one of these two scenarios. Okay, I don't know how the market is going to open up on Sunday, but we'll probably see, right? We'll probably see how it wants to open up on Sunday, right? So that's my drawn liquidity to the upside, and I've also pointed out where I'll be looking for anticipating price to find support, right? Where I'll be anticipating price to find support if it wants to go up. Okay, so notice this week we traded down into this inverted fair value gap, right? We traded down into this inverted fair value gap. Honestly speaking, I was thinking we were going to be bearish this week because of how the market closed last week. Okay, notice we traded into the inversion fair value gap, then rejected off and closed bearishly. So I was honestly thinking maybe as soon as we open, we're going to trade up a bit, maybe into the consequence encroachment of this week. Trade into the consequence encroachment and navigate towards this inverted fair value gap. That was my framework for last week, but it all changed because last week was the last week of this month. Sorry, I said last week. We are still in the week. Today is Saturday. Okay, so we are still in this week. So this is the last week of. We are already in the new month. Today is first. This is 1st of March 2025, right? So I was honestly thinking last month. I still in this week, right? So I was thinking this week is probably going to be very very bearish. So I was thinking more like trade up to the consequence encroachment of this week, then sell off towards this inverted fair value gap. Okay, but that was not the case. So we had price had a completely different scenario. So it traded down, took the sell side liquidity below this previous week low, traded into the consequence encroachment. Let's see if it got to the consequence encroachment of this week. So let's see that. Okay, right, traded right into the consequence encroachment of this long week. Okay, traded into the consequence encroachment right there, took sell side liquidity and boom, turns around. So since we are in trading in NFP week, this is still a valid drawn liquidity to the downside if only I see a gap down on Sunday open. Okay, new week opening range. If it gaps to the downside and price probably trade back into it for resistance, then I'm going to resume my bias, aiming for this inversion fair value gap. But for now, I'm going to be going with the idea of a bullish dollar in mind. So that's just the framework I'm going to be going with. So I'm going to add inverted fair value gap, bottom, right? Okay, let me set it to the window. So inverted fair value gap, so traded, so that's the framework I'm going with. So I'm going to be having a bullish dollar, so I'm going to just name this order block. Okay, so this is an order block and also an immediate rebalance, because if you take a close look between this high and where this candles this week close, you can see that there's just buying, so that's some kind of imbalance. So it can open up, trade down for an immediate rebalance, and also trading at the same time, trading into this bullish order block, then before continue going up. So that is just the bias I will be going with. But for the now, so let's go to the next time frame, which is the daily time frame, right? The daily time frame. Okay, so this week was pretty tricky because why was it tricky? Why is it tricky? Is the fact that when this happened, okay, you can see this was on Monday. On Tuesday, then we started saying, I was like, okay, that's it. That I was like, okay, we are going to be seeing a bearish week. Then as soon as it hits this, as soon as it traded into this fair value gap, and at the same time, there's a volume imbalance here. Okay, you can see this volume imbalance. As soon as it traded into it, you can see the volume imbalance here, right? Stretch it out in time. But as soon as it traded into it, you can see the reaction on Wednesday. It was just buying, buying, buying. So those that thought we were going short, I had to change buyers. I had to switch buyers. So right, so now we have this order block high, then we have the inverted fair value gap, we have the consequent encouragement right there. Okay, then at the same time, you can see we also have this bearish fair value gap here, bearish fair value gap right there. So and you can see that price is trying to go upwards, right? It's not showing signs that it wants to start dropping now. You can see the momentum that it used to move to the upside, right? You can see that. And before I continue, the series on weekly preview, market preview, is more like, it's not like a teaching series. It's not like I'm not gonna put it, it's more like sharing my opinion on what I think the market is likely going to do on a weekly basis, right? It's not teaching, it's not like mentorship or none of that. Okay, it's just me sharing my ideas with the community of what I think the market is likely going to do. Okay, so the series on teaching and all that is going to be different. Okay, but we just resumed, so let's start with market preview. Okay, let's start with pre-market analysis. Then as soon as we get back on our feet, we're going to come back, we're going to begin actual teaching, right? We're going to start actual teaching, but for the now, we are just going to be focusing on market preview, right? So now back to the pre-market analysis. So you can see we traded nicely into this bearish fair value gap, right? And you can see we just had a tiny rejection there. So this market is still very, very bullish, right? It's still showing bullish momentum. There's no signs, there's no rejection. If there was a rejection, maybe it closed bearishly, I would have said, okay, this fair value gap is likely going to hold. It's likely showing signs of acting as resistance, and there's high probability of price, turning around. But you can see it closed very, very bullish. So right now we are above consequent encouragement of this fair value gap. If you bring your fib now, and I don't want to make the chart too don't want to make it too kind of busy, so I'm going to remove this other block. You can have it in your chart. Okay, I'm going to remove that other block annotation there. So I want you to just focus on this fair value gap. So we have the consequent encroachment of this fair value gap, right? We have the consequent encroachment of this bearish fair value gap right there. Okay, So this is the consequence encroachment, and you can see it's partially, it's just below the consequence encroachment of the weekly inversion fair value gap. Okay, so now because we are trading above it, it is currently acting as a support level because we have traded above, we are currently, price is currently sitting above it. So Monday might likely just open if there's no gap to the upside on Sunday opening. If there's no new week opening gap to the upside, if it just opens or opens normally, if it's just a market that opened without any gap, then the framework is that if it opens and start trading down to this consequent encroachment and the consequent encroachment of this inverted fair value gap, if inversion fair value gap, I don't know if I'm saying that correctly though, if it trades down to it and we see an instant reaction, then that supports the framework that price is likely going to be bullish. Okay, but we don't know yet. Let's just see the reaction on Sunday how the market opens up. But if the market opens with a gap to the downside, right? If it gaps below it, probably gaps below it, then trade back up into it, and we'll see some sort of reaction that resumes the bias of our bearishness. So that is just going to be market retracing to go down. That's the market maker sell model building up. Okay, but for the now, I'm going to side the framework I'm going with into the week is bullish bias, but that is if what I'm anticipating, if I see what I'm anticipating in price. Okay, that's just me having an opinion on what I think. So my opinion doesn't really count though. It is what price is actually doing. That is what counts. That is what matters, right? Not what you think the market should do. It is what the market is actually doing, right? So not what you think it should do. So let's go uh to the 1 hour. Let's see if we can get something from the 1 hour time frame. Let's see if we can have something from the 1 hour time frame. Okay, so right here you can see the momentum that price used to move to the upside. Okay, we will trace down, exactly, we will trace down. Okay, let's see. So you can see it's trying to retrace, right? So right now we have this huge imbalance there, buy side imbalance, sell side inefficiency. Okay, so for the now I'm not going to be framing anything from the hourly time frame. I'm not going to be marking out anything. I just want to see how the market is going to be opening up on Sunday. Okay, that is what's going to give me a framework that I'm going to be working with, right? So all right, so that's what I'm going to be working with. So though we have this huge imbalance here, okay, we have this huge imbalance there, but right now I'm not looking at anything from the hourly time frame. Okay, I'm just going to be focusing my attention on how the market will open on Sunday. That's on Sunday opening price. So let's see how the market opens up. That is what is going to set the stage for my framework. Okay, so that will be all on dollar. So let's move to our next currency, which is the Euro USD. Let's see what we have there. Hopefully this stuff is recording. Hopefully we are recording. Okay, we are recording, right? Okay, all right, sorry about that, just a glitch on the software. All right, let's start from, as usual, we'll start from the weekly time frame. So the whole idea of what I'm trading is the weekly range expansion. So you can make more research on it. I believe we still have some videos on the weekly range expansion in this channel, right? So you can, do your research on that topic. That is all I'm doing. I'm just trading the weekly range expansion. So it's not just like, that's what I'm basically doing. Nothing more, nothing less. Okay, I believe I haven't cleaned up these charts, so let's just go right ahead and clean it up. You can see we have annotations, so let's go right ahead and clean it up. All right, so the framework was the same thing. So we had for this week I was thinking, okay, we closed bearishly though. It was like way below what I was expecting. So we closed bearish as at last week, and we closed bearish. I was like, okay, since we traded into this other block, this week is going to probably be bullish. It gravitating towards the buy side liquidity that is resting above here, and probably this buy side imbalance, sell side inefficiency, or fair value gap above there. So that was the framework I was going with, but it all changed, right? When the dollar index changed direction, it at the same time changed the direction of the foreign assets. Okay, so now we so what happened? We traded above this high. You can see we went above this high. The buy side liquidity that residing above that was taken out, and this is a redelivered, rebalanced price level. Okay, I don't know if we are familiar with that. So this is redelivered, rebalance. So this area was redelivered. Now we are going to be rebalancing it. I don't really have the, how am I going to put it, time to go into deep details on it. But as I said, this is just our market review or preview series, okay, which is going to be done on a weekly basis. Then as soon as we get things up and running once more, we can resume proper teachings, right? Okay, so now basically you can see what we did. We went above this old high, taking out buy side liquidity, so that's more than enough PD array to use to form a setup, right? We went above this old high, taking out buy side liquidity there. So that's just it. You don't need multiple arrays, okay, just one is enough. So we took out buy side liquidity above that previous high. You can see the rejection, so price sells off heavily, right? So now if you take a close look to the downside, you can see we have this uh higher low, right? So this is low resistance liquidity run. So we have buy side liquidity, sell side liquidity here, sorry, sell side liquidity here, and you can see we are also making reference bank to some sort of imbalance. Okay, so you can see it here, this imbalance. So we traded into it, moved away, and now it's like price is trying to revisit it, right? So but this is a long-term goal, right? We need something near term. We need a low fruit hanging, or is it, how does ICT make use of the term? We need a low hanging fruit target, right? So now the nearest we have is the last 2 week low right here. We are going to be having sell side liquidity below that. So and if low, right? So but for the now we have this near term sell side liquidity residing below that. So this is our near term drawn liquidity. So and if price trades to this low, I don't see any reason why it shouldn't reach for this side liquidity. At the same time, we have this other block right here. Okay, you can see the reaction traded into this other block and see the reaction there. So that's also a drawn liquidity. But my primary focus is liquidity and or imbalance, right? So I'm not focused on this other block right now. Focus on where the liquidity is, because that is where price is going to be drawn towards, right? That is what price is going to be drawn towards. So now let's go to the lower time frame. You can see we have this inverted fair value gap here. We are currently trading below it, and if you also take another close look, you can see we have between the closing price of the on this candlestick and the low of this candlestick, there's just selling. So that's an imbalance right there. So price can literally just open up trade to the upside for an immediate rebalance before it starts selling off, right? So that's a drawn liquidity to the upside for me. Because if the week is going to be bearish, it must first and foremost trade up first to form the high of the week, right? So if it's going to do that, I believe trading back up to this low for an immediate rebalance is one of the things it should do, right? It's one of the drawn liquidity to the upside for the high of the week. So I'm just going to call that old low, right? Old low. I'm just going to call it old low. Then if it wants to be aggressive, really aggressive to the upside, then we can be looking at the consequent encroachment of this week right there. Okay, so but I'm not going to go into that. I don't want the chart to be too busy. So what I'm going to do now, I'm going to go to the lower time frame. I might have sorry, the daily time frame. I might have something that aligns with that consequence encroachment perfectly, right? Okay, you can see. So now we traded above the buy side, taking out buy side liquidity before it rolled over, right? Before price rolled over, and we have this old low. And at the same time, if you take a close look at this old low, this is also a breaker block, right? So we have a high, a low, a higher high, and a lower low. So this right here becomes a breaker block. And if you also take a look, you can see we have this imbalance. So we have things that are aligning. We have premium arrays that are clearly outlined here as our drawn liquidity to the upside, right? For price to act as what? As resistance. Okay, since we have already taken out the buy side liquidity above this old high, this becomes a high resistance liquidity run, right? This becomes a high resistance liquidity run. Okay, and you can see we traded down right down into this is one order block, this is one consecutive order block, and we also have a redelivered rebalance price level here. Okay, redelivered rebalance, and we also have this inverted fair value gap. Okay, so you can see we have this inverted fair value gap there. Okay, notice the reaction from it. Okay, there was a little bit of reaction, but not enough to conclude that price is going to start going up from this level, right? So we also have this inversion fair value gap. I don't even know if I'm using the right word. Is it inverted or inversion? Okay, don't really know. I just know the function. I just know how to identify it. That's just what matters to me, not how it is pronounced. So if I'm saying that wrong, I apologize. Right. So now you can see we have this inversion fair value gap. Price traded into it, and you can see a little bit rejection, but not more than enough to set the stage for a total reversal. Okay, but that's fine. Okay, so let's see how the market opens. And if it wants to go up, we have an old low from the weekly time frame here, which is also acting as a breaker block. Then we have, I don't think it's going to reach for this imbalance. Okay, I don't think it will reach for the imbalance, but we already have our framework there. Okay, if the dollar, it all depends on how the dollar index is going to open up on Sunday. Okay, which is tomorrow. It all depends on how the dollar index is going to open up. That will set the stage for either a continuation to the downside or a total reversal, right? If it reverses, you can see that we have a relatively equal high here. Okay, they are relatively equal. So but this is a high resistance liquidity run. This is a high, so it's going to take a lot of orders, or it's going to take a lot of momentum to get price above this high, because liquidity was taken here, right? So it's going to take a lot and lot of momentum to get up there. So okay, so for the now we have our drawn liquidity to the downside, which is the sell side liquidity residing below this low right here. And if it becomes very aggressive, because this is NFP week, we have liquidity here, which is low resistance liquidity run. So this is a low resistance liquidity run. We have an inversion fair value gap here as also as a drawn liquidity as well. Okay, so we just go to, no need on going to the lower time frame. Okay, I'm going to do lower time frame analysis on Sunday, sorry, on Monday, after the market has opened up. That's when I will do analysis. So we're going to also do an end of day, that's after market, each and every day we're going to do an end of day series as well. That will be after we are done trading for the day. We're going to share a review of what we did on that particular day, every trading day, right? But I'm going to keep in updates on what I'm looking at in my charts. I'm going to be updating them in our telegram, in our community telegram group. Okay, in our telegram group channel, I'm going to be updating, going to be posting my chats there and sharing my thoughts with everyone. So if you are not part of the group, I'm going to leave the link to the group in the description of this video, so you can probably take a look at it, right? So I'm just going to leave this as it is. No need of going down to the lower time frame. Or let's just look at the 1 hour time frame for completeness sake. I believe this is our first clip in a while, and making it too long seems like a lot of work, right? So I don't want the video to be too long. So there's nothing much for me here right now, even though I have this imbalance, but I'm not looking at this right now. Okay, I'm more interested in seeing what price is going to be doing on Sunday. All right. So Sunday opening gap is going to set the stage, or probably on Monday trading is going to set the stage for a clear buyers for next week, right? So now let's go to the next. We are already taking a lot of time, so I'm just going to draw the curtain in EU. Hopefully our next weekly review video won't be this long and we'll be able to cover more assets. Okay, so I'm a little bit rusty right now. I'm just trying to get back get back on the trying to get back on the reading, or you know just get my head back in the teachings. Okay, so it's kind of like still new to me, or I don't know the right word to use there, but I'm trying to get back on the reading. Okay, all right, so we still have some annotations here, so I'm going to take them off. Right, so now this was my drawn liquidity, so I can say that pounds actually was like the stronger pair this week, right? It was stronger than euro because it actually did reach for my drawn liquidity. So you can see it moved up aggressively into this inversion fair value gap, and you can see the reaction it did, right? So now it is also trading in currently in this fair value gap right here. Okay, so but I think I want to see it trade below it, probably come back into it for resistance and sells off, right? So we have the sell side liquidity below here, and but we're going to be using this imbalance as our drawn liquidity to the downside on GU. Okay, we're going to be using this imbalance. So as for our upside draw, okay, we traded below this up close candle, so this becomes a weekly order block, so price can literally just open, trade back up into it, and at the same time we have this inversion fair value gap, so we are currently sitting below it, so that makes it an inversion fair value gap, right? That makes it an inversion fair value gap. So price could probably open up, trade back into it for resistance, right? So in trade back into it for resistance and trade back into it and use it as resistance. So that's what we'll be watching for. We'll be watching for that. Let me inside. So we'll be watching out for this. So price probably opened up, trade back into this other block, and maybe stretch a bit to the lower quadrant of this inversion fair value gap, then sells off. Okay, that's more than enough to set the stage. So let's look at the daily time frame and see what we have there. Okay, so now trading into that inversion, is it this ounce? So trading into this fair value gap, right, and close below the inversion fair value gap. So we have a high, a low, higher high, lower low. So this down close candle, they are a breaker block, right? And we also have this fair value gap here. So probably just gonna, it all comes down to how Sunday is going to react, the opening price on Sunday, how it is going to react. Okay, how it's going to open up. If it opens up higher on the dollar or lower on the dollar, then it's going to set our stage. But for now, I am going to be like, I'm bearish on foreign asset and bullish on dollar. That's the framework I'll be going with, but it can be changed. Okay, my bias is always subjected to the direction of the market, not my own opinion, because your at the end of the day, your opinion doesn't count. Okay, it is what the market is actually doing. That's what you want to be trading, not what you think the market should be doing. Alright, so that sets the stage for it. So I have my drawn liquidity to the upside, probably opens up, stretch a bit into this fair value gap, then close below the real the what's it called? The reaction should be immediate. Okay, even if it doesn't stretch to this fair value gap, you could literally trade to the low of this breaker, just a little bit outside of this inversion fair value gap, weekly inversion fair value gap, then into this breaker, and you can see immediate reaction. So on the daily time frame, we have, as our drawn liquidity, we have sell side here, we have this imbalance, but I want to see this imbalance give way. I want to see price trade through it, trade through it, stay below it, come back into it for resistance, then okay. But I want to see this guy give way as well, this inversion fair value gap. I want to see it give way. You can see we closed just at the premium high of it, okay, but I want to see price trade below it. I just want to see all this giving way. Okay, I don't want to see this providing support, right? That is going to as well confirm my bearish bias. Okay, so I believe that should draw the curtain on this week market pre-analysis or preview, right? So for next week, I'm going to try to increase our pairs. I'm going to try to increase the assets we'll be looking at. I don't just want this video to be too long so that we don't get bored while watching it. Since we are only looking at previews, not actual teachings, just pre-market analysis, I believe the video should not be too long. So I honestly apologize, and I want to say thank you for sticking with us to this part of the video. So we're going to see you in our next clip.